Good morning, everybody. Welcome to our Thursday questions and answers session, where we get to spend time with analysts who look at the numbers of the companies we invest in, and they share their insights with us. We're going to be talking about Reinet with Marnus today. It's a very boring day on the JSE. The thing is flat. Everything's just about flat. There's absolutely nothing happening in the market today, and I see by the attendance that this call is also a bit flat today. But be that as it may, we look forward to sharing time with you. Please type your questions in the chat as we go along. Otherwise, you can ask them outright by switching on your mic, and we look forward to dealing with them for you. I'm going to hand straight over to Marnus to be talking to us about Reinet. Thank you, Marnus.
Thank you, everyone. Welcome to today's call on Reinet Investments. As a bit of an executive summary, what we'll look at today is the net asset value breakdown. So currently what it looks like based on the latest information that management shared. And then post the Pension Insurance Corporation Group sale, the transaction value is around 5.7 billion pounds for the entire business. And then Reinet holds around 49.5% of PICG. We'll quickly have a look at the investments, so the listed side and the unlisted side that they hold. We'll have a look at the valuation, so peer performance, specifically to the JSE peers, and their price to book value. And then we'll also have a look at the historical close-end funds discount, and then versus the Reinet discount. And then the recommendation is undervalued with an intrinsic value of 615 Rand a share. When I looked this morning, it was around 537 Rand a share. And we'll just touch on that and have a look at that quickly. So we quickly have a look at the net asset value breakdown of Reinet. The left side of it, left chart, is the latest information shared by management. So you've got 69% of the assets held is all in unlisted investments, 29% in listed investments, and then 2% is your cash or your liquid funds. Now, this is based on, sorry, I think I said that wrong. So cash and liquid investments 29% and listed investment 2%. But this is based on the latest information that management shared. Now, post the PICG transaction, PICG as that stands holds around 54% of the unlisted side of the investments. Post that transaction, that changes to 78% of cash and liquid funds. The listed investment side is still 2%, and then the unlisted investment side is around 20%. Now, it's still unclear. The business, so let me explain Reinet. Reinet's business is taking funds, investing it in either listed investments. So listed investments, that's where you can actually see the share price moving. Cash is your bank deposits. They do have a bit of short-term notes. They mention around 3-month short-term notes that would earn interest. And then you've got your unlisted side of the business. So unlisted side of the business is like investing in a business that's not where you can't buy it publicly, and you think there's upside. Holding 78% of your investment in cash is not something that would entice investors to hold Reinet shares. So there's a few options here where Reinet management is looking at, that we believe they are looking at. It's unconfirmed yet. But as soon as that transactions are completed, which is estimated in the first quarter of 2026, they're either going to pay a special dividend because they don't have anywhere to invest in, or they have a few investments lined up, and they might use some of this cash to invest in those businesses, or pay a portion dividend or something in that sense. Or a very big part of the shares held is held by internal or insiders, which I'll touch on a bit later. And they might buy out the business. This is speculation, it's not confirmed, but when that takes place, you would expect close to net asset value price for the business, otherwise it would not be fair to the current shareholders. That's just touching on that cash portion. We'll see what management gives more information on the next note or next information that they share. In the recent information that they shared, this was an event, the PICG transaction was an event after the period reporting, so there was no clear indication of what's expected there. We quickly have a look at the investment side, listed investments. So that's investments that's actually listed on an exchange that you can trade in. So Grab Holdings, for instance, is listed in the US, but it's actually an Asian tech company. I call it Asian. Its head office is in Singapore, and it offers like a ride-hailing service, food delivery service, lending. They're also doing a bit of digital payments. That's Grab Holdings, which accounts for around 35% of listed investments. And then you get your 49% that's in SPDR gold shares. So that's a listed ETF in the US that you can buy that holds gold, a portion of gold or gold shares, gold bullion that you can get upside as the gold price moves as well. So you don't have to buy the futures, for instance. And that's basically the listed investments, because that's 85% of the listed investment side of it. If we have a look at the unlisted investments, so this is excluding the PICG transaction, just because we already know that's an insurance business and that's probably going to get taken out. I want to stand still at the unlisted investment side of it, because it's important to understand if you're investing in Reinet, what you are getting access to. Reinet holds, for instance, a position that's 31% of the unlisted investments in Trilantic Capital Partners. Now, Trilantic Capital Partners on the right there, that's the Europe side of the business. They also have a North American side of the business. It's unclear if the investment's in both, only in the one, but let's say its investment is in both, but also let's look at the European side. That's their holdings. That's what Trilantic Capital Partners is holding at the moment, which buying Reinet shares gives you access to these type of businesses, which you would not normally get access to as a normal private investor. Trying to find a minimum limit that allows you to invest in Trilantic Capital Partners, and the number I got is $10 million. If that's accurate, I'm not 100% because I couldn't find anything on their website. But the normal investor don't have access to that type of money just to put in an investment that's unlisted, and you will probably need around 5 to 10 to 15 years of patience for that investment to play out before you really see a return. So that's basically where you're investing in, and why you are investing in it is going through these unlisted investments, going to see what Trilantic Capital Partners is investing in, and then deciding if that's businesses that you want access to. On the valuation side of it, peer comparison, you've got your Remgro, you've got your Bright, and then you've got Reinet. The left chart is a price to book value at the bottom, and then on the left is a return on equity. These guys trade more or less in line with a price to book. Remgro is at 0.77, Bright is at 0.68, and then Reinet's around 0.7 as well. So that's very much aligned, but the return on equity for Reinet is much higher than the other two. And then on the right, you'll see again current price to book value, a bit more aligned, with the dividend yield much higher for Reinet and Remgro. Now, it's just important to note on Reinet's side that speaking just to Reinet, their inflow of cash is not sales, not selling anything. That's actually dividends received from investments or the sale of businesses, which they then get cash back for, which is then basically their inflow. They have a bit of cost to run the business. And if they hold a large portion of cash, they'll pay out that year's earnings, the net earnings, as a dividend yield. If not, they'll hold on to that cash and reinvest it if they see opportunities. So a dividend yield in this instance is not a guaranteed. If there's very favorable investment opportunities, they'll probably hold on to the cash or keep a portion of it. Or if they're running low on cash because they already invested last year, they'll maybe hold it back just to keep cash flow. If we have a look at the share price performance of Reinet versus the benchmark, which is JSE Capswix, it's actually performed quite well over the last 3 years. You can see the blue line there, it's outperformed. And then over 10 years, for instance, it's also outperformed. So it's doing decent. It's performing quite well. Management have a good track record of providing a constant return, and it's outperformed the benchmark there. Then just the share price performance versus its peers. You see that since COVID, that black line, that's the Reinet, underperformed till about 2022, mid-2022, where it started ticking up, and it's caught up with the benchmark and Remgro. It's also, the chart might be a little bit misleading. If you have a look there, Remgro is up over 80%, for instance, benchmark not far off, and then Reinet's about 60, just above that 60% mark. So which means, you know, it's still quite a bit of underperformance, but it is up and it's doing pretty well. At least you're not invested in Brad then, which is basically not moved anywhere in the last 5 years. So closed-end funds, historical discounts. These companies trade at a discount, and they trade at a discount for a very good reason. I'm going to explain that now. But the closed-end funds up until 2024, this is an extended chart. It was pulled from Investment Company Institute. You can see there on the equity side of it, you can say that a decent discount is between 10 and 5%. These are global investments, it's large investments. It's not specific to South Africa. So while Reinet holds a bit of bonds, we'll rather just look at the equity side of it. So we can assume that a good discount for these closed-end funds is between 10 and 5%. Now, if we look at Reinet's bottom chart, that's a price to book value chart. So your net asset value is your book value. That's the value that you have per share. And then you have the price. Trading at a price lower than 1 means that the price is trading lower than the asset value held in the book. That then brings me to the valuation portion of it. At the bear, base, and bull, you get a discount to net asset value. So that's the reported net asset value by management. You get a 40% discount, a 20% discount, or 0% discount for the bull case. Now, 0% discount is basically the value that management is assigned to each asset is realized, and that's the real value of the asset. If we just move back to the chart below, you can see historically it's traded quite a few times very low, but it's traded quite at a deeper discount to that net asset value. And also, if you think about the previous chart, it's trading quite low to that discount, where historical norms it's between 10 and 5%. So you get a weighted intrinsic value of 650 Rand a share, with 14% upside when these slides were completed. But there might be a very good reason for it. A net asset value assigned by management would be audited, and it's still an assumption made, specifically with unlisted investments. With listed investments, you can go onto the your finance, wherever you find your data, and go check what the share price is trading, multiply the number of shares held, and you know exactly what your asset value is worth at that point in time. With the unlisted investment, you need to make assumptions. You need to think about, where is that investment? If that investment is in Africa somewhere, there might be a bit of currency risk you need to consider. There might be country risks that you need to consider. The higher that risk, there will be a higher required return, which means that increases your weighted average cost of capital, and that decreases the value of that asset. So management does not really give you all that information, and that's why the market is assigning a kind of a discount, a probable deeper discount to that unlisted investments. Unlisted investments is also not very liquid. I can't go and sell 20% of my holding tomorrow. It's not a listed asset. You have to go find a buyer for that asset. Then you need to make sure that that asset that you are selling is a fair value for your shareholders, and go through a few of these hoops. That's why, for instance, the PICG transaction will only be completed next year. So there's a lot of risks that's assigned to these unlisted investments that just needs to be considered when investing in a company like Reinet. And making sure that assets can be realized. A good example that I can explain or show is, again, the PICG transaction was a year end. They valued it at 3.7 billion euros. And if we look at the 5.7 billion pounds converted to euros, and then 49.5% of the stake held, it's only 3.2 billion euros that they're selling their position at, which means they're getting a lower value than what they thought would be a fair value for that business. And for that reason, there's a lot of times a lower value that these companies trade at to their net asset value. Another, it might not be widely spoken about, but another thing to consider with this is, for instance, I know it's in a different sector, but if you look at Bowen Properties, it's trading at a price to net asset value of 0.3, but it's been trading there forever. But 65% of the listed or of the issued shares is held by insiders, which means there's not a lot of movement in the share price. There's not a lot of upside because the number of shareholders that can actually move the share is not sufficient. That also creates a liquidity issue. And that's why trading at such a deep discount for such a long time. Now, if we look at Reinet, their insiders hold about 32% of the shares, which is 25% the Rupert family, and then 7% Reinet's investment business as well. So it's another thing to consider. It'll be interesting to see if the PICG transaction is completed, if these insiders buy out the business, if the insiders, or if they pay out a special dividend for that cash, or if they find different investments to invest in. That is not a known public information at the moment. I'm sure the management has an idea what they're going to do. We'll see in the future. If they decide to buy out this business, I'm sure the offer price or the take-out price will be close to that net asset value. Otherwise, the net asset value reported will not be a fair value, which is what's required to value this business. Thanks, Soro. I'm sure you'll do the technical analysis on your part. I hope this makes sense. It is a bit different to the usual businesses we look at.
No, perfect. It does. So you're saying the NAV is around 730?
Correct, yeah.
Okay, cool. All right, let's hop into the technical bit quickly. Let me take over the share here. And I'll take you to the chart. And if you think of Reinet, it's kind of like comparing a Chinese SUV and an old Mercedes ML350. You know, the Chinese SUV will have your trailer and you'll tow it, but on the uphills, that turbo will have to work really hard, where the diesel knocker just keeps on going with all the torque. And when I look at the share this morning, I thought, yes, like I overlooked this completely. So I want to show you what I looked at. And if you look at this, these circles that I drew here, these are sideways actions over a very long period of time. I mean, this thing was sideways probably from 2019 to 2023, almost sideways, right? And then sideways again from sort of beginning of 2023 all the way through to just about middle of 2025. But then I had another look at it. I thought, yes, like if I draw a trend line in here, you see this line that goes red now? If I draw a trend line in here, there's actually an upwards move that I'm not spotting. This portion here was $250, and the stock finished over 600 there. Currently sitting at around 520. So we're talking a doubling of share price in a 3-year span, and it looks like there's absolutely nothing happening. So sometimes these charts can be very deceiving. It is currently in a very sideways channel again. Don't know how long that'll last. Like Marnus has said, the support, and that's definitely around 510, which happens to be Marnus's bear case. So you can definitely buy at those kind of levels. And yeah, it's definitely got potential to go further up again. So maybe a solid buy for your portfolio with a very long-term view. But certainly overlooked. And I completely misinterpreted the chart when I drew those ellipses, thinking, yes, like this thing's just sideways, until I drew that trend line and I realized could have doubled my money in 3 years. So quite a return on that. Let's hop into the questions, see if there are any questions for you, Marnus. Okay. Interesting question from Dennis. He says, why are you comparing to Bright? I think it's just BAT. I think it's the BAT that confused you, Dennis. He's not talking about the tobacco company. He's not talking British American Tobacco. He was talking about Bright. He was comparing Bright and Remgro, who are in the sort of the similar game, you know, investment holding companies. So I think that clarifies it. The BAT. Yeah, what is the BAT? The BAT share code BTI anyway, eh?
Correct, yeah.
I think,
BTI
yeah.
is British American Market, and
Yeah,
that's Brett, yeah.
Yeah, but I think we're so used to talking about bats, that we easily can easily mistake Bright for British American. All right, I don't see any other questions. Marnus, this was insightful, and I think, like you said, if the insiders want to buy the business, they're going to have to pay fair value. That's a heck of a lot of upside from where it is. The business is very cash flushed. I mean, it's got heaps of cash. So it doesn't have to retain the cash it generates, possibly pay a dividend. I don't see many negative scenarios, even though there are risks with unlisteds, it doesn't look like there are any negative scenarios around that can knock this thing down quite a bit. So I'm definitely on your side, leaning towards the positive side, thinking that around 510, 515, you could pick up some. And if you're impatient, drop them at 600. But like I say, this diesel motor looks like it's got some legs, and over time it can grow some more. So maybe hang in there and put it as part of your core portfolio, not your trading stocks, not taking short-term punch with it. That would be my take on it. Then next week, we're going to be talking about Microsoft. So we're going back offshore next week. We're going to deal with Microsoft. And then next week, Friday, I've got a talk with the fund managers where we interview the guys on the unit trust side. But you may find this of interest because we're going to be talking to the guys at All Weather Capital, and we're going to be talking about equity portfolios. So it's almost directly linked to what you're doing in your own portfolios. We're going to be asking them how they pick stocks and so on. So if you want to join that, then drop me a mail and I'll send you the link to the registration page of that. That'll take place next week, Friday at, I think, 9 o'clock. Yeah, 9 o'clock next week, Friday. Otherwise, we'll be back same time, 11:30 next week, Thursday, talking about Microsoft. Thank you very much for your input, Marnus, and everybody on the call. Thanks for joining us. We'll see you next week. Cheers.
Cheers, everyone.